Liberation, everybody. Liberation. Liberation. Right? Who's liberated today? I bet Don Dawson is a liberated modern male seasonal trader.
Good morning, Dale. How are you? I feel liberated, all right. I got back from the
I,
gym. I didn't hurt myself, so that's a pretty good day.
just stay vertical, buddy. I hear that's a
Exactly.
trick, right? Good to have you back, Don. Seasonally, what's top of mind here
Well, I was going
in
to
April?
start out here a little bit with I'm going to do a share screen if that's okay. And
Sure. Yeah.
should be seeing the gold chart. I was just going to bring up gold. I mean, it's always on the tip of everybody's tongue, especially in this recent rally
Oh,
we're
sure.
having. But if you
Yeah.
notice this peak that we had back over here, it's a
Yeah.
beautiful uptrend. I don't see any weakness in this trend yet. I mean, it could reverse, but I'm more of a trend follower, so I wait for more definition. But one thing I do follow a lot of is seasonality. And it was just kind of ironic how we had this huge reversal right here in this April timeframe here. And want to bring this up here. And when you come back, you take a look at the seasonal patterns on gold. Here's the that's MRCI's seasonal pattern. I just used a
Yeah.
December contract here because basically on the left you can see January through December, basically the whole calendar year. But if you look,
Yeah.
gold is on. And this is something I've written about in my articles before. But one of the best times to trade gold is like during the first quarter of the year. It's just been one of the most traditional, best rallying quarters of the year for them. And basically, what we did, the same thing we did this year, was really good, strong rally. Then it rallies into the at the end of the first quarter, right into this peak right here. And notice that's about
Yeah.
mid-April right there. All right, and it's pretty
Beautiful.
much where this chart was. I turned my chart off on gold there. Let's try this
That looked like exactly the path that gold took.
one. Right, exactly. And oh, here you go. And just came up here and it ran and get this back here really
And
quick.
so your seasonal
There we
would
go.
say if that's a peak that you can just wait till July for your next good entry.
That's what I was just getting ready to say. The same thing, because as a trader or especially as investors, I mean, if you're an investor, timing is still important because if you can
Yeah.
buy when markets pull back and
Yeah.
then get on board the next, hopefully move up. Timing using seasonal patterns for an investor to me would be very make more common sense to me
Yeah.
than just I'm going to buy gold right here. It's like okay, well, that's okay if you want to sit on it for 20 years and maybe it'll come back. But I just don't like buying highs like this. So anyway, my point on
The
this,
art of trading all boils down to the when, doesn't it?
mhm, yeah, and I mean,
Not if. A lot of people trade on if. Well, I'm sure
yeah,
gold will be good long term. I'm sure this will be fine long term.
yeah,
They don't care about the when. They just want
exactly,
in. They
yeah.
just want in.
And then
Yeah.
I'm just going to pull this up, but here's that January 1st of the year, but that beautiful first quarter run that we had this year didn't let us
Yeah.
down again. And it was interesting because if we go back, I'm just going, and of course these are going to be futures, so I'm going to have the liquidity back here. But here was last year's.
April again.
Uh, There we go. So here's your
That's a
January
low.
timeframe of
Yeah.
last year of
Yeah.
24. And then we get right on up here in April. And then we had a little peak over here. Well, not May, but again, this is what we could probably see this year doing the same thing because it is a very bullish market. The
It
point
sure
is, it's just
is.
like at this time of the year, it's kind of hard to see another explosive move to the upside. That's all. I'm not going I wouldn't short it here, but I wouldn't get overly excited about buying it up here either. So I just wanted to kind of bring that up to just sort of make people more aware of there's better times to buy gold. And I think what we're going to see is maybe, and remember, corrections not only can go down, but just like we saw for last year, it can go sideways, right?
Right.
So peaking out here in April means we could just chop here until we get somewhere around this 1st of July. But basically, look at this. It's the beginning of the third quarter. Think of these metals and even financials, if you will. Quarterly times are interesting in a lot of markets, but gold, in my opinion, is probably one of the best as far as first quarters are usually up, second quarter's down, third quarter's up, then fourth quarter's down. And it's a pretty cool
Nice.
pattern if you can, and then you get your trends to confirm it, and then that's something to take a look at. So, but anyway, I just wanted to bring this up here on gold today, and it
I
kind of
know
ties.
there are no seasonals on this, but I also know you're very seasoned. Anything we should be paying attention to with things heating up between Pakistan and India?
Um, I'm just trying to tie into the only thing I heard, I was at the gym this morning. I saw, I'm trying to remember the guy. He was from, can't remember his name now. He was on the Shark Tank, the bald headed guy that was on there. It's like my
Oh,
guy, but
Mr. Wonderful?
Mr. Wonderful. There you go. He was on there talking, and he was making a comment about like if India signs this deal to let U.S. cars come in without that 110% tariff or whatever it is, he said he sees the Dow going up 1,000 points on that. And I was like, whoa, that's pretty interesting. So, and you'd mentioned before I came on about there's a lot of a holding pattern right now. You don't see big money coming into the market. And I'm a swing trader. I don't do day trade. So for me, it's really shortened my time in the market because the moves are not, there's really not a lot of continuation in a lot of our markets right now. I'll be
Yeah.
glad to see some coming in, but right now I'm just kind of tiptoeing
Like,
around, let's put it that way, and not putting
yeah,
any
and that's
big
not
ones.
your style, really. Your style is you're a trend trader with that uses seasonals.
Yeah,
So what
yeah.
do you do? Do you just lay off the market for a while down, or do you
I become
say,
much
or do
more,
you shorten your time, your time horizons?
yeah.
Look at
I
4 hour charts.
Yeah, I basically just cut my risk down. I usually trade minimum size, and I
Yeah,
don't. This isn't my time. I don't feel like this is my time to reap profits. Is what I'm not that like. For example, if I was in a gold, coming into one of these quarters like this or another
yeah,
instrument, then I start getting a little bit more aggressive. But when I'm in these kind of times where the volatility in the market is just so big, and yet the market's going. A lot of these markets are going nowhere. I noticed you were
yeah.
talking about the euro there as well. Starting to base and go sideways as well. And typically, what I found is, and if the euro is going sideways, then the dollar is typically going sideways, right? Just because of the weighting of the index, but the or a dollar index. I'm sorry, but I've noticed when the dollar index starts to go sideways, a lot of our commodities, because they're priced in dollars, start to go sideways as well. And so
Okay,
I don't see anything in my future like to get me really excited about putting big money on the play or in the market until we start seeing some more trends starting to develop. And could they be
okay.
coming? Of course, but I don't know when. And so I just kind of play minimal risk right now is how I'm looking at
How are seasonals in the energy patch going into driving season?
it. We've sort of already played that one out. I can show you a chart here on oil really quick. And let's see, let me go back here one.
So we've already peaked and we're going down
Yeah,
now.
that what that seasonal has. It actually failed this year because of the surplus oil that was coming along. I just pull a December uh, seasonal pattern up here, and that way again we can see the entire year. So this is just an overlay of the 30 year and the 5 year and then the 15 year, which is a pretty common one. But and again, this is another one that has a very good traditional from December up through the 1st of May, basically, is when that rally. That's a really good run in crude oil. This is one I like. Not only do I like to see trends on this, but I start looking at the commercial activity and I'm looking for refiners, basically gas companies who have to be buying oil. I'm looking for them to be getting bullish during this period right here. And this year, it just didn't materialize. And we didn't get that rally all the way into May. So May is typically our peak up in here, as you can see. And then throughout the rest of the year, we just kind of dwindle and go sideways. You get that September right around here. You get the Labor Day little perk up
Maybe
right
they
here.
invert. Do these
Uh-huh.
seasonals you ever see them invert? That
This,
say, like, April's supposed to be a high, or, uh, or late May is supposed to be a low, just an
yeah.
inversion of a
Oh,
cycle.
yes, you know who's doing that right now is copper. Copper has been just destroying seasonal patterns, and I think there's so many cross currents in there with China tariffs and trade wars going on, and the economy slowing down. That we're seeing exactly what you just said there. We should be peaking and we're troughing, and we should be troughing and we're peaking. So that's just a time there after following seasonal as long as I have. You realize that seasonals they're just sort of out the window right now for a copper market. And so
Okay,
you just learn to leave that market alone seasonally. And just if you want to trade the trends, that's okay. But I don't try to apply seasonality when you're seeing those kind of, and we're talking about big, like these kind of peaks right here are turning into troughs on the copper market. So it's
interesting.
run away from
Yeah.
it.
Okay.
But what
Let Go ahead, Don.
I was just going to bring, how are we on time? We got a little bit more time?
Yeah.
Okay, I just wanted to,
Long time
I just
ago.
finished up an article yesterday because we started out talking about gold, but this is something that a lot of traders don't pay a lot of attention to. I just wanted to bring this up here, so I wrote about it yesterday. But on barchart.com, when you log into it here, or to log in, you just get onto the website. There's a link to the news articles right here, and that's where you'll find my articles at by clicking on news, and then over here under featured authors, Don Dawson is right there. And these are all my archived articles for the years I've been writing for bar chart. These are all free. You can use get these no subscription or anything. And I just wrote this article yesterday, and it's on the DBA ETF, which is the Deutsche Bank Agricultural ETF. And just want to touch something here really quick. It's a really nice way to look at, i.e., inflation, right? And then if you got rising inflation, you got opportunities for traders as well. So it's Invesco is the firm who created this ETF right here. And basically, this is what the ETF has looked like. This is going, I put a chart, a weekly chart going back to COVID here. I heard you guys talking about that before the show as well. But this is what this market has done basically. And this is an inflation type of an index. And if you notice, it too is it's like gold. It's not showing any signs of weakness right now of turning down. I mean, we got a little bit of weekly pullback right in here, but if you look at these significant lows in here, they have not even been challenged, right? So they're looking really good. Now, this
I would, in
DBA
fact,
is a
it's interesting you brought it up because that's what I was going to ask you about was after the tariffs announcement, they clipped all the grains, and the grains are acting like it didn't happen because they all
right.
came back pretty aggressively. And I'm thinking with La Nina out there this year in the Pacific, that maybe we're going to have some trouble with dryness in the breadbasket this year.
It's interesting you brought that up, Dale. I'm familiar with El Nino and La Nina, that type of thing. This
Yeah.
year, I heard we're supposed to have something called a Euro Nina, which is it's not El or La, it's the one in between. And the problem with the in between one, they're so unpredictable. We can get
Yeah.
in different parts of the country now, we could get extremes of either way, wet or dry, but it's going to be very difficult for weather predicting this year. Did you notice yourself
Interesting.
this past year how accurate weather forecasts were? It was unheard of predictable, right? But and I'm sitting
Yeah.
there going like, because I've always said if I ever, when I die, I want to come back as a weatherman because it's the only job you can be wrong so many times and people still pay you, right? So they actually got it right more this past year, and it was part of because it was based off the El Nino, I believe it was, but it gives consistent patterns, and La Nina gives consistent
Right.
patterns, makes our job a lot easier. This year is
Okay.
supposed to be a lot more erratic weather patterns. So I'm kind of keeping an eye on that, especially in the crops, because the crops are really driven by weather. So
Yeah.
I'll be interested to see how that unfolds this year.
Yeah. Well, they've had nice recoveries. I think, and I don't, and corn did not make a new low. Wheat
No,
hasn't yet, and beans I don't think did either. So, you know, they're really underowned,
yep, they're
aren't
holding
they?
they're
I
holding
mean,
their own. That what's interesting with this DBA index right here, and right there, this is the components of them based off of April of this year, and
yeah,
I got these, pulled them down, got the information here, but this is what really drives it. For example, cocoa, like one
yeah,
of the things I like about this index, there's no energy in it. These are commodities that we eat
right,
basically. Okay. The one
right.
problem with like the Goldman Sachs commodity index, it's so heavily weighted
Energy,
in the oil
yeah,
market or energy market that if you
yeah,
put a crude oil chart next to the Goldman Sachs commodity index chart, you could overlay those and they're just 100% correlated just about. Here, what's interesting is you have markets like cocoa because it's carrying the most weight in here. And we remember what the cocoa market just did, right? Had a
yeah,
beautiful, I mean, huge bull market run. Coffee is making
yeah,
a bull market run. Sugar, I think, is turning around, getting ready to make another run here as well. And there's a couple of notes I found I put in this table here as well. If you wanted to check those out when you read the article. And here's your corn and soybeans, and they carry a pretty decent weight in this as well. And some wheat, live cattle, all new highs,
yeah,
feeder
yeah,
cattle, all new highs. Lean hogs are coming back up to new highs again. So these commodities are kind of like sleepers. And as individuals, we don't pay much attention to them. But when you take a look at them as a whole, this is not looking like the Fed's going to be cutting rates as aggressively as they want to, unless something happens administratively and Powell gets thrown out or something like that. I don't know. I don't even want to get into that, but I'm just saying they want to cut rates. And if you look, they're predicting what 4 cuts between now and December, a quarter point cuts. It's going to be a little hard to do that if this inflation doesn't start backing down a little bit. So I just kind of wanted to get the viewers and let them see that there's this index out there, and DBA is the symbol. Very good index to track
Yeah.
true inflation in the market. It goes down here. I got a
Do you
couple of
do
things.
you trade it at all,
You
or
can, yes. I
okay?
do it on the ETFs. They got them right
Yeah.
here. The DBA ETF is some of the ways you
Right.
can actually trade these. So,
Right.
and also, this is another fact that I found that this DBA has outperformed the S&P in the most recent years, believe it or not. And what's the S&P's done? 20 some percent for 2 years, right? So
Yeah.
this DBA is a sleeper, and people need traders should be aware of it for diversifications in their portfolios. So, if you get beat up on the S&Ps or something, this is a good investment to get pick up a little bit of profit. Doesn't have a lot of volatility in it in the sense of dollar range, but that's a good thing because it's not, not whipping you all around, but at least it stays steady in its trend movements.
What's it stand for? Don't be asinine.
Deutsche Bank Agricultural. Yeah. But yeah, that's
Yeah.
probably a good one to call it.
I mean, you go to the grocery store, you
Yeah.
watch the news, so
Yeah.
why not buy what you're complaining about paying for?
Exactly. And then down here,
Yeah,
you can do futures and options also. But also, one of the things I like about this, if you trade cocoa, for example, or coffee, those trade on the Intercontinental Exchange or ICE Exchange. Their data feed is like for an individual trader is like 125 or $30 a month. And it's ridiculous for a handful of markets you can actually trade on there. So to get around that, you can buy the DBA, especially if you look at the weighting here. If cocoa starts to go into another bull market and it keeps this weighting in here, because these weights change based on
yeah,
reallocations of how the trends are doing. But if cocoa does another bull run, that's what leads the DBA. So you could trade DBA and basically be a proxy for the cocoa market. Same with coffee. Either one of those two are going to be tracking coffee and cocoa because of the weight they carry in there, and for a
yeah.
lot
I would.
less.
You may want to be careful trading on the ICE exchange
Oh my
because
gosh.
you could end up in El Salvador.
Yeah, I've never, I just never
I'm
been a fan
sorry,
of
Don.
ice.
I'm sorry, Don. Sometimes I just can't help myself. All right. Thanks for
It's your
putting up
show,
with
Dale.
me. Uh,
It's your show. You're going to take all the hits
I
on
like
that.
to hear you laugh. I mean, you bring good stuff, but I like my guests to have a good time. So, I mean, you brought some key stuff for us to
Yeah,
consider going forward. Any feeling on? I know you're trading, but do you think China's going to uh, come to the table, or they're just
I
going to
think they
play this
will.
out?
They don't have much choice. Their economy, I wrote about them, gosh, it was almost the end of last summer, I think it was. But I actually see China becoming another Japan on their economy. You remember how Japan had their
Yeah,
housing bubble and boom, 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 boom?
yeah,
I see
yeah,
them going down the same path. I wouldn't surprise me at all. And their economy, they're doing everything they can to, put stilts under it, and it's
yeah.
going to come down. I just don't see how it's going to
So
work here.
we have more leverage.
Yes, I believe so. I think we're going to see them coming to the table long before we have to bid.
Okay, here's a $1 million question. Was the low in SPX at 4,800 the low that's going to hold for a rally to new all-time highs?
Wow. That's, I've got I trade when I'm in my indexes and stuff like that, I do like monthly charts and I'm looking at that and I've got now my monthly because of the move, it came down, is a sideways market for me until it comes back up and either makes a new high or it gets another close or two higher on a monthly chart. But
Okay,
I really
Un, it's unclear.
not, yeah, I'm just not, I don't see a clear signal on it.
Yeah.
However, I do watch. I just want to, if you've got a little bit of time here, I'll bring this up really quick. Stocks and S&Ps.
Always have time for your wisdom, Don, really.
Oh, well,
So
thank
go
you.
ahead.
This is the S&P 500, and it's a number of stocks over their 20-day average, 50-day average, 100-day average right here. So the one I like to follow is this 50-day average right here. And let's go to the full chart right here. And what I've found historically, the 50% of this is a good number to look at. And what that means is when this is 50%, when the number of S&P stocks, all 500, when over half of them are above this, that's usually a pretty bullish scenario. And whenever half or more are under their 50-day moving average, that's usually a pretty bearish scenario. But for traders or investors like me, for example, I wait and wait and wait for this opportunity right here. You see, when we get down to this 10 right here, that means, and we went down to 5, that means that at one point in that sell-off we had, 95% of the S&P stocks were under their 50-day moving average. If you think about the demand there is to put money into the stock market, basically from 401ks, pensions, you name it, that does not, it's like a rubber band effect. When it gets down there, it's the yin and yang, and boy, do we get big moves back. However, this we normally see, like when we came back to this retest here, normally what we want to see is if you overlaid an S&P chart on this, I like to see when this comes back and test and makes a higher low here, I wanted to see the S&P make a lower low. That right there is like my multi-year buy signal when I see that. So right now, because I've seen, if we go back into here,
So we need
remember,
one more low. We need one more low
uh,
under those recent lows, right?
yeah, and it's like a divergence.
Yeah,
Exactly.
okay. All right.
So if we go
I
back,
got it.
remember when you had the October 23 lows from the
Yeah,
last bear market we had? And you see how
yeah.
we came down here, we first touched it, and then we went up like this. And here, if we go back and we look at the S&P, you'll see that in October 30, the S&P's made a new low here. But meaning the number of stocks making new 50-day or going under the 50-day averages didn't do that. So it wasn't a broad market move down here. It
Got
was
it.
just these magnificent sevens made a new low. That right
Right.
there set up the most beautiful bull market,
Oh yeah.
takeoff right there. And that little indicator right there is something I wait for. And you notice it doesn't happen often. It can be a year or two apart, but I track this thing religiously. And when I see
And
this
this one's
scenario,
not as clean because you don't have that non-confirmation.
right, that's where I'm confused right now. I want to see, and I think we still have a chance
One
of
more
possibly having.
new low would do that, I bet.
Yes, exactly. Because I don't think this is going to come down that low, to tell you the truth. I have a feeling that something could send, like we got earnings season coming up and stuff like that. Maybe that'll be enough to drop the S&P down to a new low. And as long as this doesn't make a new low and we have a divergence, there we'll have
Yeah.
that new rally to get started. So you see, this could take a month or two or three or a year to actually work out. So I'm not a big bull fan off of this. To me, that's not a big move in the
But
S&P.
but that setup would be your bullish setup. So if we get this sell off into June or July, um, I think we could have maybe shake the tree one more time, Don.
Right.
Take
Uh-huh.
out that 4,800 level and really
Exactly.
panic people
And
for a
here's the
few
480.
hundred.
Yeah, yeah. So
Yeah,
I watched the S&P basically, but
yeah,
there's the 480 right there, same
yeah,
concept. But this comes down to here, and that other indicator stays up, like a divergence. That's what I'm looking for. Matter of fact, let me just
yeah,
show you that really quick because we were talking about that on. There we go. So here's remember last year, that 23, here's that
yeah,
October I was talking about. So here's
yeah,
where we'd made that low there in September, and the stocks over their 50-day moving average went up into here, but it didn't make that new low, but the S&Ps did. And boy,
yeah.
when that thing turned right here, that was the buy right
Okay.
there.
We've
Yeah.
got a case now, man. Everything.
That's just what I'm looking for longer term. If I want to get like ready to pounce back in with all my investments or whatever,
Yeah,
and I basically just follow the S&P index. That's where I like to put
yeah,
money in, or the RSP, which is a balanced, equal weighted S&P. That's where I
yeah.
like to put the money out. But boy, I wait for these kind of setups to really pile
It's
in.
interesting. You come to the same conclusion that I do using a different kind of divergence because I'm just looking at straight RSI on
Mhm.
these charts. And if you put up an RSI on any of the charts you showed me that haven't bottomed, you'll see that we were confirming the price low. There was no divergence on the price low. They were all confirmed lows. And markets rarely bottom when momentum is confirming the price low.
That's
So
interesting. Okay, good to know. Okay.
just, I'm just sharing
So I'm in that camp that
because I love
this
you,
could
man.
roll
I
this
want to
thing could
give you
roll
all these.
over. Yep.
Yeah. All right. Yeah, it looks good. And you know what? What a great thing bar chart is, guys. If you, I mean, to do look at the left side column for using it for charting, and then go there and read Don and follow Don, because every time he's here, I learn something new, and now I have a setup, an additional setup for should the narrative I'm looking for, some more pressure in markets into the early summer. Um, I'll be looking for a market tell based upon what I learned from Don today.
Yeah,
I'll
I
have
tell
to
you, when you
call him because I don't use that indicator, but
well, if you, yeah, if I'm just going to be sitting here going like break that 480, I'm going to be right on that page looking at those number of stocks
yeah,
under the 50-day moving average. As long as there's no or there is a divergence, it's time for Don to get back in the market. So
Don Dawson, everybody. Follow him, read his articles. It's a great site. It's a good place to educate yourself if you're fairly new, and it's definitely goes all the way up to expert level for people that really want to learn both the technical and fundamental parts of the market. But they have some great editors and contributors, and Don's their best. So we brought the best from Bar Chart, Don Dawson.
thank you. Thank you very much, Dale. Appreciate it. And good luck, everybody, with your trading and be safe out there. There's, crazy markets
Yeah,
and keep that powder dry.
and Meshuggah world, Don. We live in a Meshuggah world. You
It's,
probably don't. It's a Yiddish word for crazy.
no, there we go.
So Don, thanks a lot, buddy. We'll be talking again in July, and I have a feeling that we're going to have a hot grain market next time you and I talk.
I might be in that camp with you there, Dale. I tell you, it's
Yeah,
looking pretty good. Corn is going to be the leader. I think it's
yeah,
got the most strength out of the wheat,
yeah. It
soybean,
hasn't
corn.
made new lows for I don't know 6 months now.
Yep. Yeah.
So yeah, it's got, and all of them, the bases are so large. They've been
Mhm.
basing for so long because I thought they were going to finally come out of the hole at least 20 times in the last few years. And corn's really the only one that did and held it. So um, anyway, that's it.
Well,
Go ahead.
if your viewers would pay attention to that Invesco DBA I was just talking about, and you can go to the Invesco website and you can see when they get ready to change the allocations around, if they get that sense that corn is getting ready to make that it starts to trend a little bit and they feel that's going to be the leader, you'll see corn replacing cocoa. And that'll be the heaviest weighted. So what that telling you is somebody as big as Invesco is going like corn's getting ready to make a big move, and that's going to be our new leader now. So if you
Boy,
see that shift up there, that's going to be your first sign that, or a sign that corn's got a pretty good move coming ahead of it.
yeah, and that's a great market tell to know that you just learned from Don, and really appreciate you going out with another pearl. There are enough pearls here today, Don, for us to string a necklace and put it
But,
on Mrs.
but
Cleaver. Okay,
thank you for having me,
brother-in-law.
Dale. I really enjoyed being here,
Uh,
and everybody have a wonderful spring and stay safe.
all right, buddy. I'll get in touch with you to confirm a date in July or August. Okay, bro.
Sounds great. See you.
Don Dawson, everybody. Gave you some good stuff to pay attention to. The gold peaking maybe sideways into June, July. What's happening with the markets, DBA, a lot of things to chew over. You could join the team in 15 minutes on the morning edge. And remember, don't just count your ears of corn or your Cocoa Puffs. I don't know. How many Cocoa Puffs would you have a day? And count your blessings. Do it. It's hard to be depressed and grateful simultaneously. So find something you're grateful for and smile today, okay? Good hunting the rest of the day, everyone. See everyone tomorrow. Join the team on the morning edge. Adios.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.